Hello, financial mavericks, investing prodigies, and money-making enthusiasts. Welcome back to Investing Lighthouse. Today, we're going on an epic journey to discover the golden treasure that's been captivating humanity since time immemorial. Yes, you've guessed it, we're talking about gold. So, let's embark on this journey into the world of gold and why it's such an alluring asset for investors. Gold has a mesmerizing history. It's been a symbol of wealth, power, and a currency standard for thousands of years. It was used in ancient Egypt, Persia, Rome, and many other civilizations as currency and was central to their economies. In the old days, gold was used for trade as gold coins. Gold was the world's first universally accepted currency. The allure of gold can be traced back over 5,000 years to the ancient civilizations of Egypt and Mesopotamia. It's believed that the Egyptians started mining gold around 3000 BC. As they were fascinated by its shine, durability, and the fact that it didn't tarnish, gold quickly became integral to their religious life, being used extensively in the creation of statues of gods and the decoration of temples and tombs. Most famously, the burial mask of Tutankhamun. Gold also played a vital role in trade, with gold bars, not coins, used in commerce. Similarly, in the ancient city of Sumer in Mesopotamia, gold was used to craft intricate jewelry and artifacts. Mesopotamian gold work would influence later civilizations, including the Greeks and Romans. Gold eventually permeated all major ancient civilizations. The Romans, Greeks, Incas, and Aztecs all found unique uses for gold, from creating stunning pieces of art to shaping them into coins as a currency. The Roman Emperor Augustus, who reigned from 27 BC to 14 AD, introduced a standardized gold coin known as the Aureus, greatly facilitating trade across the Roman Empire. Gold's pivotal societal role continued through the Middle Ages and the Renaissance. Kingdoms and empires rose and fell, but gold remained a consistent symbol of wealth and power. But here's where it gets fascinating. Are you familiar with the gold standard? During the 19th century, significant gold rushes in California, Australia, and South Africa triggered a massive global influx of gold, leading to the adoption of the gold standard by many countries that started pegging their currencies to gold. This meant that a corresponding amount of gold was stored in their treasury for every piece of money. It began in the United Kingdom in 1821 and was soon adopted by other countries. The gold standard made economies stable. Inflation was predictable and economies did not fluctuate wildly. It was like an anchor, keeping the financial boat steady. But as World War I and the Great Depression hit, countries began abandoning it to print more money and stimulate their economies. By 1971, even the US, the last stronghold, left the gold standard. The end of this era meant that the currencies were now free to fluctuate against each other, and the age of fiat money had begun. In modern times, gold continues to be highly valued. It's used in jewelry and as an investment, and is used extensively across a diverse range of industrial applications. Its high conductivity makes it essential in electronics, from your smartphone to satellite technology. It's also used in dentistry because it's non-toxic and easy to work with. It's even used in gourmet food and drinks for that extra bling. Its history is so intertwined with human civilization that imagining a world without gold is impossible. It has been a universal symbol of wealth, a cornerstone of trade, and a spark of human creativity for millennia. The enduring allure of gold continues to shape our world today. Now, why do investors love gold? One word: value. Gold is considered a store of value, meaning it can preserve or increase its worth over time. Why? Because gold is a finite resource. Only so much gold can be mined. making it a scarce resource. Scarcity creates value, folks. Let's consider the US stock market. In 2008, when the stock market was tumbling down during the financial crisis, guess what was soaring? Yes, gold. The shiny yellow metal saw an approximate 4% increase in 2008, while the S&P 500 plunged by 37%. That's a striking contrast. Gold is also considered a safe haven. Investors often flock to gold as a shelter when the financial storm is brewing and the waves are turbulent. It's also a shield against inflation and currency fluctuations. Remember the Greek debt crisis in 2010? During the period when Greece faced the risk of bankruptcy and the stability of the euro was uncertain, investors sought refuge in an alternative asset, gold. In 2011, amid the financial turmoil in Europe, the price of gold surged to an unprecedented level of over $1,900 per ounce. Now, you don't need a treasure map or a shovel to invest in gold. Here's how you can get exposure to gold prices. First, you can buy gold ETFs. A gold ETF is a fund that aims to track the price of gold. It's traded on a stock exchange just like any other stock, which makes it highly accessible. Each share of a gold ETF corresponds to a certain amount, although the ETF usually doesn't hold the physical gold. Instead, it employs financial instruments to mimic the performance of gold. This is an excellent option for investors who want to participate in the gold market without storing physical gold. Investing in this method is an excellent means to broaden your portfolio since it is straightforward and affordable. It offers the flexibility to be bought or sold at any point during trading hours. Remember, however, that you don't own the physical gold when you own the shares of a gold ETF. Yet another viable option is to allocate your investment toward gold mining stocks. By investing in gold mining companies, you are essentially betting on the success of these companies in discovering and extracting gold, thereby capitalizing on the potential profits associated with the precious metal industry. If a mining company successfully operates, its stock value could increase, sometimes substantially. Please be informed that investing in gold mining stocks entails a higher risk level than other options. The value of these stocks can vary not only based on the price of gold, but also due to the mining company's performance and management decisions. These factors should be carefully considered as they can significantly impact the investment's potential returns. Therefore, carefully considering and analyzing the company's financial health and operational strategies are essential before making investment decisions in this sector. But if the company strikes gold, quite literally, then this risk could pay off handsomely. Another way to get exposure to gold prices is to trade gold futures. Investing in a gold futures contract entails entering into a legally binding agreement to purchase or sell gold at a predetermined price within a specified time frame. This investment strategy is generally regarded as more advanced, as it necessitates a comprehensive understanding of the commodities market. Successful participation in gold futures trading requires a solid grasp of market dynamics, trends, and factors influencing gold prices. Therefore, it is crucial to possess a robust knowledge of the commodities markets before considering this investment approach. One of the notable advantages of futures contracts is the utilization of leverage, enabling investors to take positions with only a fraction of the contract's total value as a deposit requirement. However, this leverage also increases risk, as it can amplify losses and gains. Gold futures are popular among active traders who want to speculate on short-term price movements, but they may not be suitable for more conservative, long-term investors. By understanding these different ways to invest in gold, you can decide which option suits your investment strategy and risk tolerance best. It's like picking the right tool for the job. Only in this case, the job is building your golden nest egg. Incorporating gold into a diversified portfolio can be likened to adding a pinch of salt to a dish. It helps balance and enhance the flavors. Similarly, gold can serve as a hedge against inflation and provide security to your investment holdings. But wait, before you turn all your assets into gold, let's pause and consider. Gold doesn't provide a dividend or interest like stocks or bonds. Its price can be influenced by mining production, geopolitical events, and market demand, sometimes making it volatile. Plus, it can underperform when the economy is doing well, like during the tech boom in the late 90s when gold prices fell. Gold isn't foolproof like all investments, but has a unique allure. It's been a symbol of wealth for centuries, a store of value, and also a safe haven during troubled times. So whether you're an investing novice or a seasoned pro, understanding the role of gold can help you navigate the vast ocean of investing. That's it for our golden episode, folks. We're eager to hear your thoughts. How do you feel about gold as an investment? Are you planning to diversify your portfolio with a touch of gold? Do you have any golden advice to share with our community of gold miners? Spark up the comments section with your radiant insights. And while you're at it, if you enjoyed this journey as much as we did, do us a favor, folks. Hit that like button and let it shine as brightly as a gold bar. Don't forget to subscribe and ring that notification bell. It's your golden ticket to more thrilling adventures in investing. Until our next treasure hunt, stay golden, invest, and shine!